Hey and welcome to a new video. In this video I'm going to discuss a powerful trading tool called the moving average. I'm going to explain what it is and how to use it in your trading strategy. So first off, what is a moving average? Simply put, a moving average is an indicator that helps you identify the trend of a currency pair. It calculates the average price of a currency pair over a certain period of time and plots it on a chart. So let me show you over here. I'm using TradingView as a trading platform, and now I'm looking at Euro GBP and I'm looking at the daily time frame. So I go to indicators over here and then I'm looking for moving average. Over here we see the moving average indicator and I click on that. And as you can see, this is the moving average. And the default settings is set at 9. What does the length 9 mean? It means that it shows the average of the last 9 candles. It shows the average of the last 9 candles. So when I use the 200, for example, it shows the average of the 200 candles, an average. So the price goes up, the price goes down, and this over here shows the average. And as you can see in this chart, the moving average line smooths out the price action and provides a clearer picture of the trend. Let me zoom out a little bit, and over here we see that the price goes downwards, and we also see that the line goes to the downside. So it shows a clearer picture of the trend. But how do we use the moving average in our day trading or our swing trading or our position trading strategy? There are basically two main ways to use it: as a trend following indicator or as a support and resistance level indicator. So in a trend following strategy, you can use the moving average to determine the direction of the trend. For example, if the price is above the moving average, it's considered an uptrend, and if it's below, it's a downtrend. So over here we see that the price is above the 200 exponential moving average, the simple moving average, and we see that the price is going to the upside. Over here we see that the price is below the 200 moving average, and we see that the line is also going to the downside and the price also it's in a downtrend. Over here we see it goes to the upside, over here we see it go to the downside. So yeah, it basically shows you if it's an uptrend or if it's a downtrend, and you can use then this information to enter or exit trades. Alternatively, you can use the moving average as a support and resistance level. In this strategy, you can look for the price to bounce off the moving average, indicating a level of support and resistance. Over here, we see price goes to the upside, goes down, it bounces the 200 simple moving average, and as you can see, it goes to the upside. Then it drops down below the 200 moving average, but what happens over here, we see that it now is a dynamic resistance level. So it bounces off that line, it bounces off that line, it bounces off that line until we break the line. Over here we see that it goes down, it makes a pullback, and again it respects this 200 simple moving average and it goes to the upside. So yeah, it can also be used as a resistance and a support level. One thing to keep in mind is that there are different types of moving averages, such as the simple moving average, as I showed over here. We have also the exponential moving average and weighted moving average. Each has its own strengths and weaknesses, so it's important to experiment and find the one that works best for you. Let me show you over here. Let me delete this one first, and then I'm looking at the weighted, for example. the weighted moving average over here, moving average weighted, and then I'm using the 200 again. And now we see that this line is different than the simple moving average, and we also have the exponential moving average. So over here, let me demonstrate the 20 weighted moving average, and we give it a pink color. All right, so this is the 20 weighted moving average. Over here I have another indicator, and that shows the 20, the 50, the 100, and the 200. So in this case, let me only apply the 20 exponential moving average over here, the blue one. And then I'm going to make it visible. So you see that there is a slight difference. Over here, the pink one is the weighted, and over here, the blue one is the exponential moving average. Let me delete the weighted, and let me again show you the simple moving average, the one that I already showed. Over here we have the simple moving average, and we are going to give it a green color. And over here you see the difference. This is the blue 20 exponential moving average, and over here we see the green simple moving average. So there are multiple moving averages, and as I mentioned, each has its own strengths and weaknesses. So it's important to experiment and find the one that works best for you. What are the most important moving averages? Well, that is hard to say because everyone likes a different one. But I know for a fact that the most popular moving averages lengths are the 20, the 50, the 100, and the 200. So if you plot these on your charts, then you see that it often respects these moving averages. Let me show you over here. So this was the 20, we have the 100, and we have the 200 exponential moving averages. You can also use the simple moving averages. But over here we see that it respects the 200 and the 100 over here. It goes to the upside. The blue one is the 20, this is the 50, the 100, and the 200. Over here it respects the 200 again. Over here it has a hard time, but again it goes to the upside. Then it breaks the 200, it comes down. Over here we see that it respects the 20, the 20. Over here we see it's close to the 100. We see that it respects the 50, the 50, the 50, the 100, the 100 again, the 200. So as you can see, it really is important to have these moving averages on your chart to see when the price will respect a certain area. I hope you find this video helpful. If you did, please give it a thumbs up and subscribe to the channel for more forex trading tips and strategies. Thanks for watching, and I'll see you in the next video.